A two-day energy trade and supply conference is underway here in Istanbul. Istrade brings together industry experts and businesses to discuss developments in the energy sector and to develop solutions to tackle challenges that lie ahead. This year's event takes place against the backdrop of a volatile oil market. Crude prices have been rallying since the US tightened sanctions on Iran and announced it will no longer issue waivers for countries that import Iranian oil. But on Monday, oil prices pulled back after President Donald Trump urged OPEC to ramp up output in order to bring down prices. Well, for more on this, Serkan Sahin joins me now in the studio. He's a senior oil research and forecast analyst at Refinitiv. He's also an oil research coordinator at Bilkent University's Energy Policy Research Centre. Welcome to Money Talks, Serkan.
Thank you very much.
Let's start with oil prices. They've had a wild ride. They had a tough time last year, though, but now we're seeing them rally above the $70 mark. Tell us a bit more about what's driving them at the moment.
It's mostly market sentiment and the mostly coming risk from supply side and mainly driven by Iran and Venezuela sanctions. And the expectation about Chinese demand is also like much more stronger than what's actually just people are expecting. So the demand side risks are much lower than last year and the supply side risks are much higher. So the market is driven in a way that prices are going up continuously.
Interesting. Yes, because there has been a lot of concern about this slowdown in China affecting the demand for oil. So you're saying that's not actually a bigger risk as people thought it would be?
Yeah, the official statistics for the first quarter of China showed much more powerful, much more stronger growth for the country. And the oil import numbers doesn't seem to be declining. So it's going much more stronger than everyone anticipated. So in this way, from the demand side, still China-US trade talks are ongoing. It also looks like promising. So there might be a good conclusion that things will be resolved. So on the other side, supply side is problematic because due to the market structure, it's not too easily replaced to Iranian or Venezuelan barrels. So that drives another market sentiment. The market will always be in a backwarded structure that the prices will go up and stay high. And I think 70 barrels per day is a psychological barrier now. It's like we are testing.
Okay, so how high could prices possibly go then, do you think?
Technically, there is the sky's limit. But of course, $70 per barrel is a psychological effect. And also, any higher price will also have direct impact on the importers. The oil prices shouldn't also harm the demand side. Yes. We all know that China generally tries to just keep the oil import in control. And generally, it goes back in a reverse cycle in the downside when oil prices going higher, generally coming to the psychological level of 70, 75, even 80. So we don't expect anything much higher currently, but 70, 65-ish is realistic.
Okay, now US President Donald Trump, as we know, is trying to basically get Iranian oil exports down to zero. Now, what effect is that going to have on global supply?
From oil market structure, oil quality is very, very crucial. So when Iranian barrels are out of market, you cannot replace it that easily. So OPEC's reaction to Iranian sanctions just could only be coming by Middle East producers. But we also don't think that there is good amount of spare capacity to cover all the moving barrels from Iran. And this will have direct impact on India and Mediterranean markets that have high dependence on Iranian barrels. Also with Venezuela issue, especially India is getting a double hit because they also have good amount of Venezuelan crude import. This will directly have an effect on the middle distillate and heavy distillate margins and the supply that we can say diesel, gas oil, fuel oil.
Okay, now let's talk quickly. You live in London, but you're currently here for the Istrade conference. Tell us, what are the major issues that's being discussed there?
Istrade is the major and the biggest event for energy trade in Turkey, and it's covering nearly all commodities, mainly power, gas, due to market structure. But I'm here for covering the oil side and how all the subjects we discuss now is affecting Turkey and Turkey's oil market, and mainly about the Iranian sanctions, also IMO's new sulfur limitation on marine fuels, and how Turkish oil market is reflecting all of these. And we are trying to find a way to give some more insight to business and government.
Interesting. Okay, well, Serkan Sahin, best of luck with the rest of the conference.
Thank you so much.
And thank you again for coming on Money Talks.
Thank you.